Hello traders, this is Rich from Tradesight. This is the market preview for the coming session, Tuesday, April 23rd, 2013. We had a positive day today with all of the major averages, all the big three up, the S&P, the NQs, and the Dow. But it was a day that was definitely bifurcated with strength in favor of the Nasdaq. We're up about 1% on the NQs. Wasn't really until late in the session that the Dow shrugged off losses that it was carrying for most of the session. The one thing that's a little bit concerning, even though the market was higher across the board, was that internally the market wasn't really all that strong. The advanced declines on the New York side were barely positive, and Nasdaq was really just flat. But let's take a look at the major indexes and see what they have to tell us from the past session. Right, here's a look at the ES futures representing the broad market. We were still finding support here in the area of the 50 DMA. Keep in mind that we haven't really violated and broken the 50 DMA all year. We've been above it for all of 2013 so far. We did get back up into the area of the 10 EMA, but all that does is put us back into the neighborhood of this prior lateral consolidation. These higher prices above 1562.50, which remains near-term overhead, have so far been rejected. Key support is this the low from this candle here that interacted with the 50 DMA, called that 1531 and a quarter. Overhead at 1562.50. Next overhead 1593.75, which was this prior high. So those are your near-term levels. The market is trying to turn back up here. The CCI is trying to make a turn, but hasn't qualified and made a higher high yet. So for now, we're still lateral with short-term bias being neutral. Here's a look at the NQ futures, which were relatively strong on the day, but keep in mind that we still haven't cleared this previous high, and this 8/8 level at 28.1250 is still going to be formidable overhead. The other key feature to keep in mind is that while we did make this higher high off of this pivot, when we did pull back, we did take out that low. So this is still the potential here for a lower high if we turn down here and then retrade this area of the 200 DMA. So the near-term levels overhead are 28.1250, which is the 8/8 level, and the breakout from this consolidation. Near-term support at 6/8 here, 27.34, which was this prior low close. And don't count out, if we do head lower, we're going to have very important and critical support from the 200 DMA, which is right in the area of that called 27.17. So a couple key areas to keep in mind on the NQs for the rest of the week here. Here's a look at our multi-sector daily chart. This is actually kind of telling. We're starting to see here the BTK is starting to look a little bit exhausted. Biotechs were lower on the day today. The banks were essentially flat, but we did get a little bit of a bounce out of the semiconductors. So the SOX was definitely one of the better performers today, and led to the Nasdaq being able to assert itself a little bit over the broad market today. We are starting to get a little bit of an oversold bounce here in the XAU, but it doesn't really turn into a reversal until we get back above these lower levels here that we were previously stuck at. So we'll take a look at that chart just a little bit. So now looking at our other key internals, we do have that near climatically overdone put-call ratio. We got right up here in the area of that reversal threshold. Came up just a little bit short, but we do still have some oversold energy from the recent options activity. So we haven't really retraced back down to the midpoint, so there's still a little bit of oversold energy in the market to release itself to the upside from this high water move here year to date in the total put call ratio. All right, here's a look at our 10-day trend, and if you recall the previous chart, we got very close to an oversold reading in the total put call ratio. But looking at the 10-day trend here, we never really got that reading. We've climbed up here a little bit. We're above the midpoint for sure, but we're definitely well short of that 1.35 area that we would call oversold enough for a reversal. So while there is a little bit of negative energy in the market that could release to the upside, it's definitely not coming off a key oversold reading for the overall market. All right, now this is one of the key charts here. Now while the Nasdaq did have good relative strength versus the broad market today, the advanced declines really didn't come on very strong at all on the Nasdaq side. The Nasdaq side is on the bottom here. You can see that we have violated this trend line to the downside. Let's adjust this here. Nice and easy to adjust. Now, while we did violate this trend line to the downside, we do have a qualified lower high, and so this is rolling over right now. We're going to have key support here at the prior high, which is going to be about this 450 level, but the actual levels don't really matter. It's really just the design of the chart. The one thing that hasn't really given way yet is the broad market side, represented by the New York Stock Exchange advanced declines. That positive trend line is still in effect. And in fact, the advanced declines on the New York side of the market today were even better than the Nasdaq side, even though the Nasdaq outperformed on a relative basis. So this is something that's very important, and it's something that the bulls can still point to saying, okay, the health of the broad market is still there. What we have to do is we have to monitor this chart, see if this does start to roll to the downside, and if this does break and roll to the downside, then we are almost certainly going to be going lower in full force in the overall market. But for now, the way the Nasdaq is pulling on this, but we haven't seen the break yet in the New York side. So when the New York side breaks, we're going to take notice for sure. Here's the ratio chart of the NDX divided by the S&P. So it would be the Nasdaq side divided by the broad market side. You can see that we did have really good relative performance today from the Nasdaq, but even though while we did that, though, we haven't made a new high here. So while we made this lower low here, we haven't qualified in taking out this prior high to have a qualified potential reversal. So for now, while we do have some nice price action, it still has to follow through to really assert itself and to make good on itself. So it hasn't happened yet. We'll be watching to see if it does. If it does happen, that'll be a very positive development. All right, here's a look at the SOX versus the NDX. SOX was pretty strong today. Just basically hung in there with the NDX, but was definitely one of the better performers in the NDX overall. If we can get a better performance out of the SOX, break this little downtrend that we have going here right now, and challenge and ultimately break this longer breakdown, that would be very, very positive. But until we take that out, we're still basically just treading water here. Here's the weekly chart. We've really got to take out this breakdown level and get some relative strength back in the SOX to get the NDX rolling. The NDX is going to have a hard time getting going without it. So we're going to follow this chart, and hopefully we can get this thing in gear here. All right, so here's a look at the individual sectors. Let me just rank these best to worst on a percentage basis. So now we can see these sorted from best to worst. Best performer on the day was the XAU. Just taking a little bit and using its oversold energy here to the upside. The OSX, the oil services, and XOI kind of all did the same thing. SOX was up 1%, which was a little bit better than NASDAQ, but certainly not enough to really assert itself. You see the utilities kind of down low on the list here. Defensive issues for the most part. So that's fine. Transports are kind of mid-range here. The broad market struggled all day, so they were really just slugging along, but they actually did outperform the broad market as measured by the Dow, which is the classic interpretation between the two. BTK was lower on the day. We do have a 13 exhaustion in place, as you can see here on the Seeker, so definitely keep an eye on that. Biogen BIIB just posted 13 days up today, so we're going to have our eye on that for a rollover. The utility index does have a Seeker exhaustion in place, as well as a Comer exhaustion. They're both 13 days up. So if we do start to roll to the downside, might be able to play those. The utilities are not very rangy usually, and they're not something here at Tradesight that we play too much. But on an initial rollover, we definitely could see some trade setups. So we'll be monitoring those this week. Here's a look at the XAU as a sector. You can see that it did have good relative performance today, but it's really not saying much because it hasn't even really reverse the trend. You can see how far below the 10 EMA it is, and it's still below the 50 and the 200. So even though we had a nice little bounce today, the trend remains negative. Note that it's using this 0-8 level at 100 as support. That's a very, very strong level, one of the 3 strongest support levels on the Murray Math scale. So keep an eye on this. If we take out that 10 EMA, we could have a short-term reversal to the upside, but that has to prove itself before we really get involved there. Moving on to the oil services. The oil services were also pretty strong today, but like the XAU, it does remain below all 3 major the short-term moving averages, the 10 and the 50. So we got to get back above the 10 EMA before we can go back to short-term positive, and it is not. Using the 4-8 level at 234.5 for support. If this breaks to the downside here, which it probably will at some point, then we're going to put the 200 DMA in play here, right around 228.5. All right, here's a look at the utilities. The DJU just put in a exhaustion on Friday. Today we had kind of a little bit of a measuring day. So we're going to be active on the sell side here if we reverse until we get back up and above and close over about 536. If we break and close down below the 10 EMA, it's going to activate this 13 exhaustion warning that we have here, and then we'll be trading this on the short side. Here's a look at the BTK. The BTK had kind of a little measuring day here today, just kind of working off Friday's expansion to the upside. The 7/8 level here is the next level. Haven't really interacted there yet, but if we do, that will be a level. Just want to point out that we do have a 13 exhaustion in place as of Friday's candle. But I think the takeaway here is that the 1 through the 13 was really mostly lateral, and we really only started to get some momentum and a drive to the upside here only on Friday. So I wouldn't be surprised to see this chart reach up here to the 2000 level and actually use this 8/8 level, and ultimately maybe even this risk line, which is about 2030 on the chart. So we had a measuring day today. We could expand to the upside tomorrow. If we do, we're going to find resistance at that 2000 level if they can get there. But in the meantime, we've had a very aggressive run to the upside here. A lot of expansion to the upside here. So if we can complete this this week without really breaking that risk level to the upside here, about 2034, we have a really nice sell stop, which is going to be 913.9 on the weekly time frame. Here's your 9 bars up. Here's your 13, which was pretty much lateral. When you get that lateral 1 through 13, it doesn't load a lot of energy into it, and then they usually break to the upside actually. But once you get that second 9, that's the last part of the 913.9. Once you get that last 1 through 9, that's when you can have a real nice reversal to the downside. So on the long side, treat the BTKs as rental only for now until this resolves itself. Here's a look at the oil futures. The oil futures bounced back today using that 0-8 level support at 87.50.
Monday the 22nd of April.
Couple key levels will be coming into play here. The first one's kind of a minor level, which is the 10 EMA that will turn the trend back to short-term positive. We can claim that. We've got the 200 DMA above that, and 50, which is now sloping downwards. So there's going to be a lot of overhead resistance if in fact we do bounce. If we do bounce back,
I do think it was
going to be looking to get along and hold it. Really, it's going to be looking for things to run their course and hopefully turn into short stops on a roll back to the downside here.
Comer on the 5-minute chart called the
Let's take a look at the gold futures. The gold futures were a little bit higher today,
low, despite the fact
bouncing off that oversold
and actually it almost called the high on the pound.
Pivot to the downside here.
12 bars
did not take out the 10 EMA, so until we take out until we close above the 10 EMA and take out previous high, we're not going to have
so based on what I'm seeing here, it's
positive trend, but we are definitely bouncing back to the upside. We do take that out. First level is going to be 1500, which is the 4-8 level, and it's ultimately going to be next resistance is going to be about 1560 or so, which was the origin of that breakdown from that crushing sell-off that we just had. All right, folks, that's going to be it for this evening. As always, thanks for listening, and this has been Rich for Tradesight.